Hi everybody, today is February 28th, 2026, Saturday. My name is Igor. It's been a while since I did my last video and I'm back. So this time I'll call it maybe the state of the market review or something like that, and we'll see how it goes. So doing this one mostly to test the setup and the format once again, but we will also discuss something interesting in these markets and maybe even something potentially actionable. So let's start with Bitcoin and Ethereum, the quote-unquote new finance market overall. And you can see that obviously we've been in quite a bit of a bear market in the previous weeks and even months. But what's different this time is that we got some news regarding Iran and the States and what's happening, or to be more precise, what's not happening. The crash is not happening. The crash, I'm sorry, which lots of people were expecting, me included, to be honest with you. And at the moment, we see that this dip is being accumulated, actually. So that's not so bad. And it's a market classic, so to speak. Obviously, not very well known, and hopefully it will stay this way forever. But bad news and strong price action is bullish, and otherwise is true as well. Good news and weak price action is actually very bearish, and the latter actually catches lots of people in the markets because it's as counterintuitive as it gets. So that's the theme, the broad theme right now, and it is more or less present across other specimen in this domain of the coin. I should also point out that this strength, supposed strength, is only partial, because the markets, it's Saturday obviously, are closed, and not all players are there, and not all news are there, by the way. So the more precise situation will be obviously visible on Monday, and it's only a preliminary reaction, and it's only tradable if you have mastered lower time frames, you know how to scalp, and that's it. Because there is also a fundamental factor which could come in, and the fundamental factor could sound like this: like something goes wrong with the operation of the states in Iran. It maybe it becomes more prolonged. Maybe it's not as nice, quote unquote, and clean as it was in Venezuela, and obviously prolonged operation is the scenario nobody really wants. So that could put some pressure on the market and Bitcoin and Ethereum too. So we need to see how it all plays out. As we discussed it, actually, you can see that it's really nice. Like, it's being accumulated, and the volume is good so far. So that's it. The other thing in the world of coin is about another universal rule of the market, which could be summarized like this: when markets are weak, track strength. And obviously the markets are quite weak, and if you want to track strength, you will find out that these names are leading. They are fighting the trend, so to speak, and among those, number one today, exactly today, is HYPE, which is a token for the hyperliquid exchange. And you can also see that the other one, which is called ASTER, is as strong or even more strong as hyperliquid. And not only you can judge it by today's strength. Obviously, you can see that in relation to the 50-day moving average, it's above it, or in case of hyperliquid, it's near it. So that means that while others were completely destroyed, you can look at Bitcoin here, you can look at Ethereum, you can look at Solana, BNB, XRP. Well, yeah, it's as bad or maybe even worse than as others. But with Hyperliquid and ASTER, you can see that they are quite strong. And that's an obvious sign of demand. Somebody wants these tokens, even while the market is weak overall. So we should pay attention to such situations, because when the pressure is going to be liquid, when the sellers will be washed out of this market, these two are most likely to take off. And the fundamental theme about them, I tweeted about it quite a bit, and it's actually, in my opinion, it's the silent revolution of today, and the emergence of these platforms, these on-chain exchanges, is very comparable in its magnitude to the emergence of Bitcoin itself. More than a decade ago, and maybe to some extent even comparable to the emergence of AI. What's different here? The difference here is that these exchanges where you can trade, well, these days it's very rapidly getting closer to trading everything, but they started as crypto exchanges, as crypto futures trading platforms. And what distinguishes them and the rest of the space is that these are software. These are not companies in a classic sense. They do not have KYC. Because it's just a software, you just go there, go to the site, open the app, connect your wallet, and you just trade. And the number of assets which are available to trade there is growing by the day, by the week. Some sources, I wouldn't just say outright that it's a fact, but it's very trustable in my opinion, that 2% of world's silver is already trading on Hyperliquid. And that tells you something. The idea behind it is that it disrupts the industry in which regulations have largely overgrown themselves. And instead of protecting participants, they started hurting them, like the excessive regulation, the bureaucratization of finance, the merger of finance and regulators and the state. So this is a problem which is preventing industry from growth, also raising barriers to list stuff on exchanges and to enter the market. And these platforms, they address this. And ASTER and Hyperliquid are not the only ones. There will be more of them. You should also expect some hilarious hiccups along the way, like hacks and rag pulls. But these things are here to stay. That's the thing I'm pretty sure about. So that's very interesting. And once again, you can always take a look at price and see how strong it is in relation to what's been happening in the markets. Something is definitely happening here, and this is one of the classic patterns. Like, first we have this downtrend, then it breaks out, consolidates for a while. Maybe it will consolidate a bit longer here and finally break out, and we will see a larger gap with handle forming or something like that. We'll see. So that's the theme in this market, like which you could see behind that you can see behind this fog of war, so to speak. The other important theme, which is maybe not as strong as it's been before, is the privacy. It started with this breakout in XMR in December, which this one, yes, I remember it very vividly. This was the setup, and it worked well. When the time to explain came, the official version was that somebody got hacked and the bad actor was in a rush to hide stolen crypto or Bitcoin or whatever, and this generated this demand, and later it subsided. So I don't think that it's that easy, and I think that I wouldn't write off XMR right away. That's the first thing to say, because if you open weeklies, you can see that on the weekly it's a very nice chart, and sometimes we have pullbacks, but it still could repair itself, and that could mean that on a longer time frame the supply and the demand is getting dominated by the demand. And if you take into account what's actually happening in the space, the so-called adoption, which some cheered, but I was a bit cautious about it, is happening. And in some aspects, this adoption by large institutions, by large banks and investment firms is starting to look like control, more or less. And this control is basically the same thing decentralized finance was supposed to fix back in the day. One of the aspects of it, like not the mindless emission and irresponsible monetary behavior of regulators, but also control, unnecessary control. So control will increase, and it's inevitable. Like it's the normal course of development of human design systems. Humans like to build hierarchies, and with time, hierarchies outgrow themselves. They stop being useful, and they start stifling the very thing they were supposed to protect from, the chaos. So that could be a good depiction of what's happening in finance right now. And that automatically generates demand for privacy-oriented solutions, because blockchain has one big flaw. It's transparent, and with enough technical means, you can track it, and there goes your financial privacy. And in some aspects, it's even more visible than the classic, quote-unquote, legacy banking financial system. So protocols like XMR and maybe Night or Midnight protocol, which is the new one being developed by the team behind Cardano, maybe they will address this concern, and maybe the balance between the regulation and privacy will be restored. Why I say balance? Because obviously regulation is necessary, and you cannot get rid of it, and at some point, maybe at the point of transition between the private network and banking systems, you still have to use bank cards in the ATM or in the marketplace. There will be some sort of AML, KYC, whatever abbreviation system which will filter out bad actors. But it will also prevent like general stifling of the financial flow in the global economy. So you can obviously see that the price is stronger than the rest of the space. You can take a look at Bitcoin once again, and you'll see that its position in relation to the 50-day moving average, which is the average price for the last 50 days, is way stronger. But as I've said, it's a bit weaker, and this is not the primary concern. And I know why, because the Clarity Act has been postponed. So this theme will re-emerge again when the regulation in the most important market of the planet, which is the market of the states, will emerge again. I do not mention gold on purpose because it is a late stage move, and anything could happen here. Like you can see, like the volatility has contracted, but this jump has been sold. But obviously it's Saturday, the markets are closed, and we will see the legacy, quote unquote, like the primary futures market being open only on Sunday evening. So that's why I'm not too keen on discussing gold at this moment. What else can I add? Like the USDT dominance is an important indicator to mention. Obviously, it's the dominance of USDT, of Tether, and here you can see that I've outlined a scenario a few days ago. These red lines, and you can go to my X Twitter and see these initial chart. It's cooperating right now, but no breakout so far. If it continues to move to the upside and maybe even consolidate, we can go to the weekly and see the whole pattern here. It's near the top, but if it will continue to consolidate here, it's a very bad sign for the space overall and maybe to the economy at large. I still consider the world of decentralized finance, new finance, Bitcoin, Ethereum, and the likes of them as a market that is inherently connected to the rest of the economy. It doesn't act as a hedge. At least I did not see any evidence of this yet, but it's very sensitive. It's way less liquid. It's way less populated by participants still. And that's why it also trades 24/7, and that's why it's very sensitive to what's happening and what's about to happen in the markets. And this USDT dominance chart actually helped me to identify this coming sell-off in advance, and it was a very important factor in my positioning. So far, no signs it wants to retreat, and this is a bit of a counter observation to the supposed strength in Bitcoin. But as I've said, it's Saturday, and we'll see these developments unfold on Monday and Tuesday in the first half of the next week. I won't be covering everything today, but I will also mention oil. And oil, just like USDT dominance, pointed very clearly at the seriousness of Donald Trump's intention with Iran for quite some time, since January, actually, when it started to leave on top of that 50-day moving average. But what's even more important, unlike previous times, this downtrend line that in my perception has fundamental underpinnings behind it. And the primary fundamental underpinning is that fossil fuels are a bit obsolete with China's transition to renewable energy, and they're very serious. They have good track record of implementation of such large-scale, country-wide scale, global scale projects. And as of now, I don't see anything preventing them from completing this transition. So oil and India will follow their steps. It's inevitable. And these two countries are the largest market for oil in the world. So that's why the downtrend. That's my explanation of it. But what do we see now? We see now that, unlike this situation on July 25, we see that it doesn't want to retreat fast, and it has consolidated, and I think we will see a very nice gap up in futures, or you could go to Hyperliquid and check oil there, because it's trading there 24/7. But once again, me personally, I avoid trading markets like this and situations like this, because everything could change in a blink of an eye. Like, let's imagine even during this weekend, like Iranian authorities reach out to the States and they sign a deal, or they continue negotiations on Sunday, and what will we have here? We will have a nice gap down. So that's the reason behind my avoidance of such markets. If we will start to get an understanding that this particular war is about to drag on for a while, you could take a look at maybe these previous high as reference points. And in this situation, maybe it will finally convince me of being short here, because I totally understand the fundamental situation. But the volatility of it and the way it's being affected by politics, that's the thing that drives me away from this market. Maybe I will consider shorting oil at some point too here. And finally, I want to mention briefly stock market. And I think it's quite vulnerable here. And it's been in this chap. It's difficult to comment, and it's worth a discussion of its own. But this weakness in NVDA is very telling. And it's even more important when you put it into perspective, and you'll Google maybe retail interest in it, and you will see that retail keeps buying, and it's starting to look like the classic situation in which the smart and the big ones are cashing out, and retail, encouraged by headlines in media and social media, legacy media and social media, keeps buying, providing meager liquidity, but nevertheless providing something for those who know what they're doing. So doesn't look too good, and especially with this kind of volume. So we'll see how this situation will resolve itself. No pattern so far, maybe a very loose depiction of head and multiple shoulders, and maybe, just maybe, you could imagine something like a neckline here, and maybe it will pierce through it on Monday should the market gap down. Maybe the more important thing is to watch SanDisk, because SanDisk is one of the sympathy plays to the whole AI topic. And it's holding so far, but should it disintegrate, maybe that would mean a broader correction, because the market is long overdue. The market, in my opinion, it's time to reassess this AI theme and maybe assess secondary implications here. Obviously, it helps businesses make more money, but it also doesn't help the labor market. Like, if the layoffs will continue, not only that will make developed countries, Western countries, less stable socially, but also the consumer will shrink, and consumer economy is what the sole factor behind the strength of the overall global economy right now. So history has a number of examples like this, where second-rate consequences are actually not that good when it comes to primary ones. So I think, just like you, I'm pretty tired of this chop. Like, no progress in QQQ. I'm sorry, that was SPY. no progress in them, maybe with the exception of Dow and surprisingly Russell, which is a bit controversial if we keep the second-rate bad quote-unquote consequences for the economy in mind. There should be some sort of resolution, and repricing is always good. If you use risk management, you will pick up the best stocks when the correction will be over, and it will be over. Like despite the bad mood in the overall flow of information, we're not at any apocalyptic events at this point. Actually, I think that the States could be nearing one of the greatest bull markets in history, and the implications behind it could be a bit surprising, because what we see now, it's a brief topic, and I will just briefly comment on it, and we'll finalize this discussion. I think that the States, as a local superpower, could be worth way more than strong states, developing states, with reshoring manufacturing, with strong AI, and strong presence, strong projection of political and military and economic presence in the Western Hemisphere, would be worth way more than overstretched states, like the global leader, which is slowly getting too overstretched to fulfill its role. And that could be the idea behind this new secular bull market, which could emerge in the coming months or years. I don't know. So anyway, I think that's it for today. I will continue my state of the market reviews. Bye.